right. Hey, everyone, and welcome to the show. Let's get moving with Jeff and Gina. I am Gina Milloway, your local mortgage advisor, and this is.
Hey, everybody. I'm Jeff Cunningham, and I am your local real estate agent here in Greensboro and the Triad of North Carolina.
So today we are going to be talking about a very important first step to buying a home. So if you've made that decision, you're ready to pull the trigger, and you're going to be buying a home, purchasing a home in the near future, why do you need to get pre-qualified? Why is that so important?
It's the biggest question I get asked all the time.
I don't understand. Why can't we go look at that house? So
Right.
exactly. So from your perspective, Jeff, as a real estate agent, when you get somebody who calls you up and says, hey, I really want to go look at this house, it just hit the market, your first question is, did you
get yourself pre-qualified?
Did you
Absolutely,
get yourself
it is.
pre-qualified? Now, why is that in today's market specifically?
Perfect question. In today's market, as we all know, we are in what they call a seller's market.
Yes.
And a seller's market is basically driven hard by the sellers. And in most situations, the seller is in the driver's seat. And again, with today's market, our prices are inflating. Inflation is inflating. Things are just going up in value as we sit. So the speed of the market, if you're just getting into it as well, is at a very, very high rate. We are having multiple offers. We are having very small amounts of time to actually go in, take a look at the home, and say validate whether or not that is the home that we are looking for to purchase. The decision-making time is much smaller than it has been. So where we have been in the past, hey, I want to take a look at the house. Let's go take a look. Go call the bank when we're done, see if you can afford it, and then we go from there. Well, in today's market, we don't have that time. We don't have that luxury.
Right.
So
speed.
We have to, So in order to get the speed taken care of, we need to get it taken care of up front.
Right.
It's
Absolutely.
just part of the preparation.
Absolutely. Because it is. Things are moving really quickly, and we don't have the time to go look at a house and then come back to your loan officer and then go through the pre-approval process. And granted, we're pretty fast, but we know a lot of times that the home looking experience happens on the weekend. And granted, we typically answer the phone and do occasionally work on the weekend. It may not move as fast as we need to on the weekend. Not everything's open to us that may need to be open to us. So so it's really important for speed right now in today's market to go ahead and get that pre-approval letter first before you start looking at homes and falling in love with one that's, going to be off the market relatively quickly.
Absolutely. And if you can set your expectations up front, as we are speaking of here with your pre-qualification letter, of course, you are given, say, a low and a high dollar amount for what you can afford. And that's where, that's what's going to be driving your, say, selection process on top of just the aesthetics, whether you like it, as well as school systems, is it kid friendly? Is it, adult pet friendly, yada, yada, yada.
Right, exactly. So the pre-approval process really sets the tone for the home buying, the home shopping experience as far as what you can do for them, the houses that you're going to show them, the payment, what they can afford, etc. So we really want to make sure that person is truly qualified. If they're looking at a home, a $300,000 home, we want to make sure that they really can afford that $300,000 home. So that way you guys aren't, so to speak, wasting time driving around homes that aren't going to work.
Correct.
Maybe they can afford more home than what they thought they could afford. So, that goes both ways. It's to make sure that we're putting you in the right home. Make sure that the income is right, because we calculate income different than what, an individual might say that their income is. So we want to make sure that we're in the ballpark, right? We're in the ballpark.
Absolutely.
We know what we're looking at when we start going out and looking. So, so that's the biggest thing. So right now is speed. Speed is necessary. You want to make sure you're pre-approved before you even get out there on the road or start looking at those homes.
So true. Very, very true statement. And again, this is part of setting your expectations in your home hunting or your home buying experience. And again, you follow. You just got to follow the dots on this one.
Yes.
If you are not pre-approved for, let's just say, more than what you're offering, then again, your expectations are going to fall short.
Right. Absolutely.
And then it's just going to break your heart.
Right. And one, you have to think the sellers right now, is my understanding, you can correct me if I'm wrong, Jeff, but sellers are not really considering offers that come in without a pre-approval. If you don't have that pre-approval letter, your offer is not going to be put to the top of that because they can't verify it. There's no way that they can possibly know that you can afford that home unless you're a cash buyer. And we're not speaking to those buyers right now. If you're a cash buyer, that's a little different story. But you've got to have that letter, that pre-approval letter to go with your offer to make your offer competitive.
Absolutely. And even though you mentioned the cash buyers, to tie this all together here, so we're out during the weekends looking at houses, whether or not you're a cash buyer or someone just looking for a loan or to use some lending. You still need to have proof of funds, even as a cash offer.
Right.
And like you're saying, part of the pre-work that the buyers need to do is to make sure that they do have this information. Because again, speed to the market. House just comes on say Friday evening. You look at it Saturday morning. Okay, hey, I got to get an offer, and I got to call a bank and see if they can go ahead and give me some proof of funds documentation. As you said, Saturdays banks aren't open. Again, part of the pre-work that we need to do to be successful as a realtor and as a purchaser, as a client, we just need to make sure that these prerequisites are done.
That's right. And I think that it's fair to say that you just don't wake up Saturday morning and go, I'm buying a house.
Right.
You've been thinking about this. So come on, guys, work with us here. Like, you've been thinking about this. You may have just started thinking about it within the last few weeks, but this is something that has crossed your mind. This just didn't happen. You just didn't wake up Saturday morning and a house popped on Zillow and you're like, I got to buy this house. That's not typical, maybe occasionally, but that's not typical. You've been thinking about it and wanting to do something. And so use that planning to your advantage, get ahead of it, go ahead and get your pre-approval done.
Totally agree with that. And as we typically do, to get in touch with us, please use the contact information below. It'll be down below in the link, and just get in touch with us as soon as you are ready to, again, get that pre-approval process started. You do find a home that you're interested in, just use the contact information below to get that information started as well.
Yeah, absolutely. So let's kind of review the different types of letters that you can get, the different type of qualifications and what they mean, because there are some different ones out there. Now, I will preface this by saying some states are different. I'm specifically, I'm licensed right now. My primary work is in North Carolina, but I do have a couple other states, Virginia and Georgia. So this will vary a little bit state by state, but for us in this area, there are really three types. And the first type is what's called a pre-qualification letter. This letter is worth about what it's written on. So this is me talking to the bar and going, hey, what's your credit score? Great. What's your income? Great. What debts do you have? Great. Well, based on this scenario, it looks like it may be possible for you to buy. That's essentially a pre-qualification letter. I'm not verifying the income. I'm not looking at documents. I'm not going behind you and making sure that what you tell me is correct. It's just a conversation. And then
that's all it is a conversation. And you're not required as a lender to put any extra information in there other than what it's calling for.
Right, exactly. And so, the pre-qualification letters are not going to be as competitive, especially right now in today's market. I still see them occasionally. A lot of times people will go online and do them. And yes, they are pulling your credit when you go online, but they're not verifying other documents such as income. They're not actually reviewing the credit report. They're not reviewing the bank statements. So that's still really considered a pre-qualification letter. So the next step is a more in-depth look at your overall profile, and that's going to be the pre-approval letter. So the pre-approval letter is, I would say that's what we see most in this area when people are buying is the pre-approval letter. So for me, what I do when I get someone who needs to be pre-approved, I'm pulling their credit in. I'm reviewing the credit to see what's on there to make sure, late payments, collections, etc. I'm also collecting income documents, making sure that the income is correctly calculated. What type of income do they have? I'm pulling bank statements to see, what's on their bank statement. Do they have an extra bill that they're not reporting that's going to come up during the process? For instance,
Surprise.
an apartment that they're renting in another town because they work out of town. I've had that happen. So it's an in-depth look at your documentation with your credit report to make sure that you are qualified. And an experienced loan officer can take these documents and really look at them almost in the same manner, actually in the same manner that an underwriter will look at them. So that's pretty the most common letter that we see in this area is the pre-approval letter. So you want to make sure that we're at least doing that. That's the minimum if you're going to be shopping and having, a competitive offer. When you say, Jeff?
Yes, oh, absolutely, and that's half of more than half the battle. Just as you were mentioning, we see pre-approval letters everywhere. I mean,
Mm-hmm.
like you're saying, it's almost you can just pull it off a cereal box. They're just very common. They are very generic, as you say, and very broad. And then yes, to get more into the specifics and have a real fine pinpoint idea of what it is that you can afford. Totally agree with you. We need to get this pre-approval letter. I'm sorry, pre-qualification letter out so we can go ahead again, make sure that we do have all the information that we do that we're asking for.
Yeah. So we want that the pre-approval letter is going to be the in-depth fine one. The pre-qual is going to be our generic one.
Absolutely.
So, and then,
jeez, I get those backwards.
well, it's funny because people do use them interchangeable. And honestly, some people may not know the difference, but there is a difference on what's out there. And I would say that the buyer really wants to protect themselves and not do that pre-qualification letter because so many things can be overlooked in a pre-qualification letter because nothing's being looked at, nothing's being checked. Nobody's going behind you and verifying that what you say is accurate.
Right.
So.
And a real life scenario, I've had an offer. We again on a weekend. It was a Saturday afternoon, about 4:00 in the afternoon, and met an individual and asked if she had her pre-qualification letter. Absolutely does. So we go down. We had to do this old school. She's a bit of an older woman. Did not have all the technology on her phone that we require, or for any of the e-signings and so forth. Regardless. Asked her if she did have her pre-qualification letter, and of course she pulled it out in paper, and it was from one of our larger banks. And the problem with the pre-qualification letters, as we were just stating, they are just so generic and basic. They'll give us a number as far as the conversation that had been had, and it'll simply state out there, these individuals are qualified up to this dollar amount. And with these larger banks, unfortunately, in a pre-qualification letter, sometimes you can't contact anybody.
That's very true.
Right?
Yeah.
So on the weekends, when we can't contact anybody, just like we mentioned a few minutes ago, we're dead in the water.
Right.
Or you might get into a good position. This is where we talk about our fiduciary responsibilities with our clients. You might be in a great position to have an offer put in. Okay, maybe you're the first one. Maybe you're only the first of 10 or second of 10, which is great. Earlier, the better.
Right.
But at the same time, typically that's associated with or accompanied with a due diligence check. If you were to submit your due diligence check with your pre-qualification letter, and then when you went to get pre-approved and you didn't, then 9 times out of 10, and even 9.5 times out of 10, that due diligence money is it's forfeited.
Yeah, it's gone.
And again, a good realtor will spot this. A good lender will spot this for you. But at the same time, we want to make sure that you're not getting yourself into these positions that are going to affect you negatively.
Right.
Which is why we go ahead and call this pre-work.
Right. Exactly. Now, there is one more letter that you will see. You're not going to see this as often because it does take a lot more work on the lender side. And so that is the commitment letter, a bank commitment letter. And this essentially is where the file has all the documents have been collected. We review it just as we would the pre-approval, but then we upload it and have an underwriter actually take a look at the file. Now, it's really nice to have these because you know what the conditions, are, and they're laid out, in the paper. You can just start checking them off and get it done and put you a step ahead of the process. The con is that it is quite a bit of extra work to go through this. And like I said earlier, a good loan officer who's been doing this and knows what to look out for doesn't need to have this done, can issue that pre-approval letter with a lot of confidence. But the commitment letter is underwritten. It does go through an underwriter's check mark. So the downside to it, again, is the time that it takes to get these. And everybody's a little different out there. Lenders are different as far as their turnaround time. But basically, the overall deal with commitment letters and why you don't see them as often is because of that time and that commitment. So our back office, our processors, our underwriters, a lot of times they're paid on production based on how many files they get through, how many close, almost commission. And so if you have a file that's coming through that doesn't have a property attached to it and may or may not ever have a property attached to it, it's kind of freebie work for them, so to speak. And I'm just letting you guys on a little trade secret there on what goes on the backside, but it is what it is. We're all here, to earn a living. So I don't think there's anything wrong with, kind of revealing that so that everybody knows why you don't see these as often. But sure. A lot of companies are getting better at them. During the pandemic, it was harder to get them because we were just overwhelmed with refis. There was no room during the pandemic in the pipeline to do these freebies, so to speak. So, but we can do them more now. And I do them on files where maybe it's a little questionable. There's some things going on. Maybe there's a rough patch in the credit. And I just want to have that extra security behind me. But it is a nice letter to have because it is a one step ahead. Like you've already gone through the underwriting process. So now it needs the house, so we have our conditions. Let's get the house and let's move forward. So it'll speed up the process a little bit as well, but it takes a little more preparation than the other two letters do. So.
Absolutely. Well, a couple questions on that, if you got just a second.
Yeah.
So coming with the commitment letter, you had mentioned that that goes through, or that is typically a loan or the portion of the loan that is going through underwriting.
Mm-hmm.
Okay.
Yes.
Can you tell me what an underwriter or underwriting is?
Yeah. So the underwriter is essentially the gatekeeper to the loan process.
Mm-hmm.
So it's a love-hate relationship. Everybody, you love it when it goes well and you hate them when it doesn't. But essentially, the underwriter is going to be someone who is specifically trained in the loan product that you're doing. And a lot of times loan products will have different requirements and different underwriters that look at files. But the underwriter is the person who's the gatekeeper to the file. They look through and they go behind me and make sure that, yes, this was done. Yes, this was done. Yes, this meets this credential. They check it off and they make sure that, yes, this file does work. And then they use their magic and they do a bunch of other checking behind that to see if there's any judgments, any liens, anything else going on with this person that may not have come up in the initial, pre-approval process.
Right. So what it sounds like is basically judge and jury. They're the final say.
Yeah, absolutely.
On whether or not you go forward with the home.
They're like the 99.9% of the final say. There are occasions, underwriters are people too. So there are occasions where maybe they misunderstand a guideline or you have to push it up to management. And a good loan officer won't be afraid to do that. I'm certainly always willing to go to battle with an underwriter. I know I'm right on this. So,
yeah.
We've all had those battles and it feels good when we win. But yes, the underwriter is definitely judge and jury, almost 100%. Yeah.
Perfect. Well, and the reason I asked that, and thank you for the clarity on that, but the reason I asked that is, we still need the assurance that, again, the process is going to be completed.
Yeah.
So the security, as you're saying, with the, underwriting and or commitment letter, even though it may take a little bit more time, certainly gives you a better, more security
Yes.
in your purchase power.
Absolutely.
Okay. And I do know that there are some loan programs or products that are out there nowadays that are highlighting the fact that these folks or their loan will be processed up into, say, an underwriting process or point, and then from there, you're just waiting to find the right house.
Right. Exactly.
Is that about right?
Yeah, exactly.
Okay. Wonderful, wonderful. So, in that, again, is the purpose of getting these pre-approvals, or at least having a pre-approval up front. Again, pre-approval, not necessarily the pre-qual, but the pre-approval and commitment letter that comes through underwriting are certainly the better letters to have, rather than, again, the first one we mentioned, which is just
absolutely. And it's all about the consumer's protection. If you're buying a home and you're putting down $5,000 in due diligence, you don't want to risk that money. You want to do it with confidence. You want to know, I don't care how much money you have in the bank. Nobody wants to just give up $5,000.
No.
On a whim. I mean, that's not smart. So having the confidence and feeling assured that when you make that offer and you write that due diligence check, that your offer is pretty solid, that you have a really good chance of this happening, that it just gives you confidence, and it makes the whole process a lot smoother.
Great. Totally agree with you. I wish all of my buyers would have some sort of commitment letter, at least a pre-approval letter in their pocket. Again, for security's sake, I, as well as you, know that these folks are dealing with real money, real savings. And by putting that money up front based on information that they're receiving from a lender and or a realtor or both, they are putting some significant trust and some financial responsibility on our shoulders.
Yeah, absolutely.
And that's something that, again, Gina, I know we've talked about this before, but we both take very, very seriously, again, as our fiduciary responsibilities back to our clients. So we want to make sure that, again, the request that we make of them to be pre-qualified, pre-approved, and, again, underwritten, it's not just to run them through the ringer.
No, absolutely
it's actually
not.
Go ahead and get them going.
No, it's a protection. It's protection for the client. It's a protection for me, to make sure that I'm doing, like you said, my due diligence. It's a protection for you to make sure that that you're not putting the buyers in a difficult position. It's all about protecting them, and it's a very, very important part of the process. Now, let's talk about another side to this that people don't talk about. And that is, what happens when the buyer decides to do some stuff with their credit after they've been pre-approved? And I think this is really, really important. So you guys getting ready to buy a house, listen, if you've been pre-approved based on X, and then you go out and you buy a boat, or you buy some new furniture because you're getting ready to buy a new house and you put it on a rooms to go credit card. I've had this happen. You change your profile.
Yep.
And some people, it may not affect them at all. It may be a very, very small percentage of their income, so it really doesn't change it. But the other side to that is it may change it greatly. It's all a percentage, and you need to know before you go into this, will buying this car or will getting this credit card affect my ability to purchase the house that I want? You may have to go from the dream house to like settling for the okay house if you do that.
Yeah, absolutely. And yes, that has happened on numerous occasions. I know you see it more often than I do.
It's common.
But yes,
it's almost common that it happens. We talk about it and people joke about it, but it does happen. It happens all the time. And let me tell you, like, if you've ever gotten a new credit card, do you know, because then we have to start documenting. Then the documentation process comes in. I have to know, okay, yes, let's say it doesn't affect your ability to buy. I still have to document it because that new credit card is not on your credit report yet. It takes a little bit for that to happen. Have you ever tried to go get a credit card statement from a new credit card? It's not easy. No. It's not easy at all.
No. So what's the best advice?
Don't do it.
Well, fantastic.
The best advice is don't do it. Unless it's an
Absolutely.
absolute emergency. I mean, it can happen, but you need to know that you're going to be doing some work to get the documentation that you'll have to provide if you open a new line of credit. Now, there are different lines of credit, so they're not all as difficult, but credit cards, especially furniture cards, can be difficult to get that documentation that we need, even if it doesn't affect their buying power. So just be really careful on it. If you've been pre-approved based on this set of credentials, this file, if you don't have to, don't open up new ones until after you've closed and you're done with the house. Wait, because if we're 3 days from closing and they do final checks, because they do final checks, and this and this pops up, we're probably not closing in 3 days.
Right.
Your closing's now delayed. Hopefully the buyer, you have the grace period at the end of your contract, and now the seller doesn't back out because all of a sudden we can't close on time when we're supposed to close. And that does happen. It absolutely 100% does happen. So the take home advice here is talk to your loan officer. If you've already gone through and been pre-approved, or let's say you just opened it when you talked to them, let them know, because it takes sometimes 30 to 90 days for that debt to show up on the credit report.
Sure.
So if it's not there, we don't always know about it until that 30 or 90 days. So you just got to be open and honest and talk to your loan officer. We're here to help you.
Yes, I totally agree, and that's a great statement. Is yes, please be open and honest with both your realtor and your loan officer. Again, reason being, we your loan officer and your realtor, we both have a similar responsibility, which is again getting you into that house. And if I'm not getting the information over to her, she's not getting the information over to me. Again, there can be a simple miss, and again, what's at risk is some significant financials.
Yeah, absolutely.
Again, whether or not you're into your due diligence period, if you've gone beyond due diligence and you're now what a lot of folks call in your escrow, but around here we call that earnest money. And again, you've got some significant discounts. You've got some significant deposits that have already been made, and by going out and buying a $700 sofa, you could really mess yourself up. And again, that could be a real disaster for buying your house on time and also putting it in jeopardy where you might not be able to close.
Yep, absolutely. Yeah, it's a good point. So yeah, just be open and honest with you. People tend to be nervous about talking to the loan officer, about digging into their financials, especially first-time home buyers. It's a big deal to buy a home. And if you've been saving up and getting ready, it can be nerve-wracking to actually have that conversation. But we're here to help. We're here to get you through the process. I always joke around a little bit that going through the pre-approval process is kind of like me coming over to your house and unannounced and opening up your underwear drawer and just going through it.
Yep.
Whatever I find is what I find. But my job is, yes, I may find something, but how do we work it into the scenario and how do we get past it if I do find it?
Right.
And that's my job. My job is to advise you on how to move past any issues that there may be. If we can't, now there may be some issues we can't move past right now, but you need to know that before you drop $5,000 in due diligence and lose it.
Absolutely.
You need that $5,000 in due diligence for 6 months or a year from now when you can buy.
Right.
So don't be afraid to talk to us. There is nothing we haven't seen. We're kind of like a financial doctor. We have seen it all. We have heard it all. You are not going to shock and surprise us.
No, ma'am. We have seen enough.
Well,
what we need to do, and again, we just need to make sure that folks understand that this is pre-work. It's not necessarily homework, okay? It's pre-work, because these are the things that we want to see up front, and again, protect you financially.
Yes, absolutely. So do talk to your loan officer. Do get pre-approved. Don't open new accounts.
Right.
And don't
Right.
hide stuff from us, for the love of God. Please
Don't hide stuff.
hide stuff from us. So those are the big takeaways here. So we are
Absolutely.
here to help you. And if you guys have any questions whatsoever about getting started in the process, we're going to have all of our contact information listed below for you to reach out to us and answer any questions that you might have. Jeff is North Carolina area, specifically Greensboro Triad, and I'm currently licensed in North Carolina, Georgia, and Virginia. So I'm happy to help in those areas.
Fantastic. Fantastic. Yes. So, folks, if you have not yet and you are interested in the home buying process, please reach out and get started on, if anything, the pre-qual information, then move up into the pre-approval information, pre-approval step. And then if we can, keep moving into the commitment letter and the underwriting status. And that would be, again, the best place that you could be once you get into, a realtor's car, or if you're out there looking for new homes now.
Absolutely. Well, I think we have just about covered it all. Any last minute details that we need to wrap up or?
No, I don't think so at this point, other than, again, the market is still cruising at a great rate, rapid rate, I should say. Homes are still moving. Equity is still growing. So we need to go ahead and make sure that you folks are in the right position to get that house when you're ready to get that house.
Absolutely. So we'll see you guys hopefully in about a week. We are going to come on and talk about getting started with your real estate agent, what you need to know about picking an agent, and why it's important to commit to that agent. So thank you.
Absolutely.
Yeah, absolutely. Thank you guys for hanging in there, and we'll see you next show.
See you next time.